Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe. Really excited for today's show. We've got Syed Mahmood on with us from Blue Lake Capital. And one interesting tidbit is, about a week ago, I recorded an episode on their podcast. So, Syed, welcome to the show. Good to talk to you again.
Thank you very much, Brian. Thanks a lot for having me on.
Awesome. Well, hey, do us a favor. Tell us a little bit about yourself and how you got into multifamily investing.
Absolutely. I'm going to take a little bit more time to talk about myself, primarily because my background is very different. Born and raised in Pakistan, moved to the US in 2021 for my
Okay.
graduate studies. I went to Babson College to get my master's in finance. And after that, I got a job at Blue Lake Capital doing investor relations in multifamily space. I was 24 years old when I
Okay.
moved to the US. But that was my second experience in the US. My first experience was as an exchange student
Mhm.
back in my sophomore year in high school. I was given a scholarship by the US government
Okay.
and was placed in Utah. So,
Oh, hey, that's a
yeah,
great place.
that's right. That's right. So I attended Bountiful High School.
You're
Um,
kidding me.
no, yeah, yes.
My uncle used to teach at Bountiful High School.
No way.
Yeah. He
Wow.
lived he lived really close to it, but I mean, it was actually my dad's uncle, and he passed away a good 15 years ago. But I would say like 60s through maybe early 2000s, he was kind of like a mainstay at that high school. So yeah,
Wow,
Bountiful High School.
that's
Cool.
right. Yeah, small world, right?
Very small world.
I lived in West Bountiful.
Okay.
Went to Bountiful High School for my sophomore year. I wrestled there as well. And so that was my first experience in the United States. And, after that, I just fell in love with the country and I decided that eventually I'm going to move here again. So I went back after completing my sophomore year and then, did my undergrad in Pakistan in
Mhm.
economics. And then for my master's, when I was 24 years old, back in 2021, I moved to Boston.
Okay.
And so the reason why, I got into real estate was
Mhm.
because of the fact that growing up, I always used to hear that real estate is the backbone of American economy. And I didn't really understand what that meant until, I got a degree in economics, I got a degree in finance, and then I started to realize what that actually meant. There's so much work to be done in real estate. It's such a great industry, so much learning to do, and it's complex. I feel personally that if someone understands real estate finance,
Mhm.
it's much easier to understand different kinds of finance,
Yeah.
right? Because real estate finance is complex. Because you're financing, you're funding millions and millions of dollars of
Mhm.
projects. And so that's how I saw it. And after getting my master's in finance, I got involved in the real estate space and started working for Blue Lake Capital. So yeah, that's
Awesome.
what happened.
Yeah, and I've heard from a lot of people in the finance industry that they've said it from the opposite point of view. If they're not trained in real estate finance, they always say, "Oh, geez, real estate finance is complicated." I don't do that.
It's interesting you brought that up, Brian, because
Yeah.
during grad school, I interned at a hedge fund. I was their summer hedge fund analyst. It was a DeFi,
Hmm.
decentralized finance hedge fund,
Hmm.
one of the first in the country. And the principal of that hedge fund used to be in real estate. And he told me the same thing. He said, real estate finance, real estate modeling is actually very complicated, much more than what people think. And if you get the grip of that, it's every other industry is not rocket science to you
Yeah.
anymore. So yeah, no, I completely agree with what you just said.
Awesome. Awesome. So you start getting interested in real estate. What led you to Blue Lake Capital? Incidentally, Ellie Perlman is the founder, CEO, principal. I'm not sure exactly what her title is at Blue Lake Capital, but she was on the show exactly 3 years ago today. All right. I looked that up and just coincidental. Episode 185 from September 17th, 2001. So probably
Pretty
yeah. Wow.
Wow, that's amazing. Yeah, so Blue Lake Capital, I understood that I wanted to get into real estate.
Mhm.
And one fine afternoon in Boston, I just Googled, real estate private equity firms in Boston. and Blue Lake Capital popped up on my screen.
Mhm.
Took a look at their website. I thought, these guys are doing some great work. And then looked at their careers page, and they had an opening in the investor relations division. And I thought to myself, because as I told you, I'm trained in finance, economics. I thought, do I really want to get into relations? Shouldn't I be behind spreadsheets all day long? But then I realized that my skill set lies, not just my skill set, but I really like talking to people. I like client-facing roles. I like interacting with people. I like, going to get-togethers, going to gatherings, and essentially helping people make informed decisions, right? And I thought, this is the perfect opportunity for me. I
Mhm.
applied for the role, interviewed for it, and that's how I got involved with Blue Lake Capital. And ever since, I've been extremely happy with that decision. I think I love my job. I love talking to people, and just the idea of and the feeling that I get talking to people, understanding what they're looking for when it
Mhm.
comes to their investments, and just helping them make informed decisions. That's what I like doing.
Yeah.
So yeah.
Yeah, and a couple things you mentioned that you enjoy talking with people, that's definitely a bonus if you're trying to raise money because you have to talk to people. And I gotta say that's not the stereotype that I usually get for the guys with economics and finance degrees. Uh,
Yeah.
so I mean, and I say that lovingly because I have 2 degrees in math, and I don't think I'm the stereotypical mathematician either. But well, right now, let's talk about the environment we're in right now. I think that's going to be, really, really beneficial. What have you found the environment to look like right now with raising money? And then we'll go into like what's working.
Yeah, absolutely. I think, of course, we all know that raising money is a little tough right now because the
Mhm.
market is tough. But I see that as a blessing in disguise, to be very honest with you, Brian.
Mhm.
And the reason for that is, and I'd like to draw parallels, between the
Definitely.
real estate market and the crypto market, because, I started my career in the DeFi crypto space on the institutional side.
Mhm.
We often hear that there are these weird crypto projects which have no value, and they're people are investing in those projects.
Mhm.
When the market starts to go down, those projects get flushed out,
Yeah.
and only the stronger ones remain. That's how the crypto market became more efficient, and it's becoming more efficient to this day. Similarly, in real estate, I think, we have a lot of people who wanted to, get into this business, and kudos to them. I think it's a great industry. Everyone needs to get into this business. But at the same time, I feel people often underestimate what it really takes
Yeah.
to be in this business. It's not just raising money. It's not just buying a bunch of apartment buildings. There's a lot more to it. Managing, operating. Can you survive in a downtrend market? And that's what happened. It's been happening for a minute now, and I think it's really good for the industry as a whole, where people who might not be as efficient learn their lesson and realize that, all right, this is what I did wrong, and next time I'm going to work on it.
It thins out the herd. In Utah, I think hunting's a big thing, but literally winters thin out herds, the sick and the old, and it leaves the strong people. I think it's good for the market overall. And you said, I mean, you said it really the same thing, just in a different way, but the stronger left, and the people who survive it are doing exactly what you said, which is they're like, how can I learn from this? How can I, take all this bad stuff, implement it into our daily practices and become more resilient as a result. So yeah.
Yeah, no, you're right. But I do think, things are starting to get better.
Yep.
Transaction volume is picking up again. And I think next year is going to be great. So, I don't want to say it was a cyclical thing because, we had the pandemic and, those things
Yeah.
are cyclical. But at the same time, I think it was a much needed correction in market, because of the reasons that you mentioned. So
Yeah.
I do think things are picking up pace again. And then you talked about what works, right?
Mhm.
What
Yeah.
works and what doesn't work. I think whomever is, thinking about getting into the real estate industry, one of the major things I've learned
Mhm.
in my time is the fact that relationships matter a lot,
Mhm.
if not the most, because people are going to be trusting you with their hard-earned money. You need to win their trust. You need to have strong relationships with people, and that really, really helps you in raising capital.
Yeah.
Apart from the, your track record, your team, all of that kind of stuff. That stuff is given. But
Mhm.
other than that, you need to have strong relationships with people so that people may trust you with their money. You
Mhm.
know, prove yourself, prove your worth, and that really, really helps in raising private capital.
Yeah, yeah. So let's dive into that topic. And I gotta ask the question, what do you guys do specifically to just find the investors and to build those relationships?
Yeah, absolutely. So, we have our active investor base,
Mhm.
right? Of course, it's word of mouth,
Mhm.
where our investors, when they're happy with us, they tell their friends and family about Blue Lake Capital,
Yep.
uh, and then they contact us, and that we tell them about our business model, how we work, the ins and outs of Blue Lake Capital, and then case studies as well. And at the same time, I make it a point to tell people the good, the bad, the ugly, everything about the
Mm,
business. Because I
yeah.
think if I'm telling people just about, how great our track record is, I don't think I'm telling the full
Mhm.
truth. Transparency is very, very important. Whenever I tell people about our track record or
Mhm.
the market's track record or anything, I always preface that by saying, listen, the market was great a few years ago.
Yeah.
Everything was going up. So every company would have great track record. What you need to look at is, all right, which company survived? If you made a bad decision, a bad deal, and companies do that, it's fine,
Happened.
Yeah, exactly. How did you overcome that? What did you turn around that property? What did you do to essentially improve your occupancy, improve your tenant base? How hands-on was your approach? If
Yeah.
you take a look at those things, I think your decision-making ability would improve a lot. And same is the case with, IRR projections, multiple projections. Truth is, you can put anything on your spreadsheet, right? They're all assumptions, but at the end of the day, your track record matters. But at the same time, the transparency with which the company talks to you also matters a lot. I can't be telling people, hey, this is how much returns we produced in the past, so everything's great. True, we have a good track record, but at the same time, this is what the market is doing, and I need you to be informed because it's your money, it's not my money,
Yeah.
right? You
Yeah.
need to make this decision for yourself. This is information that I can give you. You decide for yourself. If you have any questions, come back to me. Transparency is what matters, which I think people often forget.
And to that point, I get more traction when I talk about my deals that have not gone to plan than I do when I talk about the rainbows, unicorns, and everything turn coming up roses. Our worst deal, gave a 5% annualized return. Very far short of what we projected. I mean, I think if anybody would have known we were going to give 5%, they probably wouldn't have invested with us. But at the same time, we didn't lose money. But going back to when I talk about that, it's transparent.
Mhm.
And a lot of people are embarrassed to talk about the deals that haven't done well, and they're not transparent. So, if you're willing to talk about the good, the bad, and the ugly, to use your words for it, I'm pretty sure you're stealing those words from someone else. I've heard that one before, but
Yeah.
uh, but yeah, if you're willing to talk about the bad and the ugly in addition to that good, people start thinking, you know what? If they're willing to tell us all the bad stuff that's going on, we can trust them in the future. It's typically how that works out.
Absolutely. And the way I see it as, I want to treat our investors the way I would like to be treated.
Yeah.
Right? Because if I'm working hard to make my money, I'd like to be informed about every single thing, every decision that the business takes, their history, their track record, what has gone wrong, especially, and what did they do to, make things work. And I think if you look at it from that
Mhm.
POV, would I like to be treated the same way I'm treating other people? I think life's going to get much easier.
Yeah, absolutely. Gosh, sounds like you're stealing that from somewhere else too. That's the golden rule. Treat other people as you want to be treated. So,
Hey.
I mean, it's interesting. I mean, things like that are they're cliche for a reason, is because they're, in most cases it's true.
Absolutely.
Yeah.
Absolutely.
There's a
Yeah.
reason it's called the golden rule. But so let's talk about the types of questions you're getting from investors right now. Is there a theme that emerges with investors right now, or kind of an FAQ list that you usually get when you're speaking with investors?
Yeah, absolutely. One of the most common questions that I get from investors is about the environment, the market environment. What's the market doing? We know that it's bad. Is it going to get better? And the truth of the matter is, well, first of all, nobody has a crystal ball, right?
Mhm.
Number two, we can make informed judgments based on our knowledge, our
Mhm.
education, and what we're seeing in the market. So, for example, tomorrow, FMC has its meeting. It's a big deal, Of course,
I won't ask you to make any predictions because we're going to release this episode after, so
yeah, yeah,
yeah.
of course, of course. No, I shy away from making any predictions,
Yeah.
but I would like people to, instead of thinking about, all right, how much rates is the Fed going to cut? I want
Mhm.
people to take a different approach. We know that the Fed is going to cut interest rates. If not tomorrow, eventually it will. But the main question is, what would be the neutral interest rate that they announce, right? And that's very important because when you look at the neutral interest rate, all right, the neutral interest rate is going to be 2.5%, 3%.
When you
Once
say neutral interest rate, can you clarify what you mean by that?
Yeah, absolutely. So neutral interest rate would be the interest rate in which the Fed is not trying to stimulate the economy or control or
Got
contract the economy anyway, right? So it's
it.
neutral. And once you have that sense, then you can make better decisions, more informed decisions, and that will give you a better idea of where the market is headed. Now, why do I say that? The reason why I say that is because let's say pre-pandemic, the neutral rate of interest was 100 basis points higher than what is going to be, let's say, announced tomorrow. If you have that information, then you can make a better judgment on the market trends. So let's say now going forward, the neutral rate of interest will be 100 basis points lower than the previous neutral rate of interest.
Mhm.
Now there's going to be more private capital. People are going to be looking at more alternative investments. How do I need to plan? What do I need to do? And based on that, what are the supply trends? What are the demand trends? Is the Sunbelt region overheating? Is it not overheating? Is there still demand? Do I need to focus on Utah because it's an up and coming market?
Yes, you do.
That's
So,
right.
yeah,
Yeah.
absolutely. The other
Yeah.
questions I didn't care to answer, but yes, Utah. But
Yeah.
anyway, keep going, keep going.
Yeah. So, when you essentially look at things from a different perspective, you get a much better picture of where you should be putting your money
Mhm.
for building generational wealth. Because most of our investors are not putting in money into our funds because they want a paycheck every month. They want to build generational wealth. And you can't build generational wealth in 1 year or 2 years, right?
No,
It's
I
long.
would say it takes about a generation to build
Absolutely.
generational wealth. I'm just
Exactly.
throwing that out there. Yeah.
Thank you for saying that. A lot of people don't understand that.
Yeah. I mean, if you could build generational wealth in 2 years, guess what? Everybody would.
Absolutely, 100%.
Just gonna throw that out there. But yeah.
Barbara Corcoran,
Mhm.
from Shark Tank, has this. She said in one of the episodes, and I love that quote. She said, "Real estate is a very, very slow way of becoming very, very rich. So, it requires patience, it requires intelligence, and then you make your money work for you."
I call it the get rich slow scheme.
Right, there we go. Yeah, that's true.
So yeah. Let's talk about this neutral interest rate. We talked a week ago. I didn't realize your background, economics and finance, and it got me fascinated now. But the Fed has talked about, they want their long-term target. Their long-term target's about 2.5% for that federal funds rate. Is that the same thing as that neutral interest rate that you're talking about?
That's a good question, Brian.
Mhm.
I haven't looked into that because it might be, it might not be, and because I have a quantitative background, I don't answer anything that I'm not 100% sure about.
Yeah.
So
Mhm.
it could be different, it could be same. I haven't looked into that.
Okay. Yeah, I mean, I've been paying attention to what the Fed's talking, what their predictions are on the future. But the federal funds rate as it sits today is 5.25 to 5.5. And the Fed is comprised of a bunch of different people. It's not just, Jerome Powell. You probably know all the details better than I do, but they've essentially come out and said that they want their long-term target to be around 2.5% and eventually get down to that 2.5% ish rate. So
You know,
I mean,
from
that's what I look at when I'm predicting the future is, okay, right now it's at 5.25. What are things going to look like if they make it down or when they make it down to this 2.5?
Right. From what you're telling me, Brian, I think it could be the same thing, but I will definitely look more into it. The number could be very close,
Mhm.
but they could mean different things, right? And that's very important to understand. When we are trained in finance and economics, we can't be making, those claims. And you would appreciate that because you
Yeah.
come from that background.
Yeah, but mathematicians love to, postulate and, throw numbers out. But yeah, anyway. But got it, got it. So that's fascinating. So looking at the future, you look for that neutral interest rate, and that's going to determine trends, is essentially what you're saying. So
Absolutely. Yeah. And also, I would say, fundamentals are also very important, of course.
mhm,
The fundamentals of the market, the very basic good old supply and demand,
mhm,
that determines everything. Where is the demand going to go up? Where's the supply going to go up? That way you can essentially make a more informed decision about, where to invest, what regions to target. So, that's another thing that people could look at. Inflation targets is something else that people can look at. And also the buying trends,
mhm,
how much private capital is in the markets? Who owns real estate? Who does not own real estate? This is a lot deeper than people might think. It requires a lot of, mathematical formulas to figure that out. But at the same time, if you look at these things just on a high level,
mhm.
just on a basic level, I think it's going to be very helpful for people in making informed decisions. When I look at stocks, when I look at other alternative markets, the stock could be, going up, down, sideways, consolidating does not matter. If the fundamentals are strong, ceteris paribus, given everything's going to remain constant, it's going to go up. So as long as your fundamentals are strong, the market is going to bounce back, and it will. You just need to make sure that you're investing with the right people.
Yeah, I think those are two keys right there. I mean, in stocks, you're looking at fundamentals and translating it to real estate. There's a product and there's a management team. With real estate, the product is the bricks and mortar, the location, the market that it's in, and then you have the leadership team. I think, yeah, you need both. And if you got both fundamentals there, your deal is going to do fine.
Yeah,
Yeah.
100%. Yeah, it's all about fundamentals. It's not as complicated. Just good old fundamentals. You're investing with the right people. The management team is good. They have a nice track record. They know what they're doing. They're aware of the market, and they're investing in good markets with high demands. You're gonna be fine. So yeah, have patience.
Now, speaking of markets, and I know Blue Lake has a lot of units across the country. What markets are you guys excited about right now?
So, Brian, we're still excited about the Sun Belt region.
Mhm.
We
Okay.
still think the demand is going to go up. There was, a lot of supply, but going forward, the projections are saying that, the demand is going to outpace supply by a lot in the Sun Belt region. So we're still betting on that. And then secondly, the population trends,
Mhm.
that's also a good factor that we consider. That's also pointing towards the Sun Belt region. And so,
Mhm.
based on those and other factors, we're still excited about the Sun Belt region.
Awesome. This is something I think a lot of people, I think, have gotten wrong. I mean, we've had a building spree, and there's a lot of people that say oversupply. They've used the word oversupply, especially in markets like, a lot of the Texas markets, a lot of the Florida markets. Salt Lake City is one of them as well that people use the list oversupply with. Does that oversupply or the amount of new units that have been dropped into like a lot of these Sunbelt markets, does that scare you guys at all? Does that make you nervous, or is that just part of the cycle?
I mean, it's definitely one of the things that we look at,
Mhm.
but personally, I don't think it's a big concern,
Mhm.
primarily because if there are good fundamentals, let's take the example of Salt Lake City, right? I lived in Salt Lake City 10 years ago or 11 years ago when I was in my sophomore year of high school. At that time, Salt Lake City did not have a lot going on. Now it's a major finance hub. So, you could look at oversupply per se, but if Goldman Sachs, JP Morgan, Morgan Stanley, Google, all these big corporations, big companies, if they're opening up their offices in Salt Lake City, that oversupply does not really matter anymore. So you have to look at it holistically. It shouldn't be an isolated approach. If there is oversupply and if there is no projection of any, heightened business activity in that region, then it could be a problem. But, if there is oversupply and there's going to be a lot of inward migration, shouldn't really matter. So
Yeah.
that's how I see it.
Music to my ears, because I think the people that are pointing to a lot of these metros and saying oversupplied, don't invest here. I think a lot of those guys are looking at like the 2 to 3 month outlook and not the 5 to 10 year outlook. That's my beef with the people that have kind of, thrown that out there. I've seen articles in different journals or news outlets, and a lot on LinkedIn too. But anyway, yeah,
Yeah,
I
no,
like that. I like that.
as I said, there's a lot of things that need to be considered.
Mm.
It's not just one factor in isolation. You have to look at every single thing in detail, and then you could get a better picture of what's going on. And I think that's how people should approach these things.
Awesome. Awesome. Well, I just glanced at the time and we probably should be closing up about now. Let's start wrapping up. A couple questions, that I throw in at the end of every episode. I think you guys call it the lightning round on your podcast,
That's
right?
right. Yes.
Yeah. So I'm going to put you through my own lightning round. So first question, what's next for you?
Just learning more, Brian. To be honest, I'm still new to this industry. I think it's great. I want to learn as much as I can, build relationships, and just succeed in this industry. That's what's next for me.
Awesome. Awesome. Next question. If you were to give some advice to somebody who is just starting out in the multifamily industry, what would that be?
Read, read, and read. Research, look at trends, look at insights, and don't be ashamed to ask questions.
Mhm. Awesome. And last question, how can listeners learn more about you?
Sure. So first of all, they can, reach out to me over LinkedIn. And then after that, they can email me as well. My email is smahmood@bluelake-capital.com. I'm very responsive over email and also on LinkedIn.
Perfect. And we'll have links to his LinkedIn profile and his email address in the show notes. So you don't have to worry about, hurrying up and writing that down or whatever. Just go to the show notes and it'll be hyperlinked too. So, all you got to do is tap on your phone and that magical internet thing is going to take care of you. So, well, Syed, thanks for coming on the show today. Very much appreciate your time and your insights on the market today.
Thank you. Thank you for having me on, Brian. I loved it.